Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the one and only Mr. Stephen Dow. And yes, he is back from Hawaii. I'm still so appreciative that you did calls with us in Hawaii last week, man. I appreciate you. Thank you so much.
Oh, my pleasure. We got to keep the
The
streak
streak.
going.
Yeah,
So yeah,
exactly.
just because I'm on vacation doesn't mean I'm actually off. But anyway, before we get started, although I work very happily for Velocity Mortgage Capital, all the ideas and topics discussed on this channel are that of my own. So let's get it going.
There you go. Hey, one of the things I want to talk about is I now believe that interest rates are going higher. I'm going to take Jerome Powell for what he said last Friday. I think
Right.
30-year money, like Matt the Mortgage Guy stuff, is going to have a 7 on it sometime late this year, early next year.
Right.
And I think that is going to slow the housing market to a crawl. And really what that means out of that is it's going to become a very good opportunity for investors, right?
Right.
Investors don't need the perfect house. We are looking for motivated sellers. We are looking for situations.
Right.
Investors, right or wrong, don't care about what the rate is. It is just one
Mm.
variable on our spreadsheet. So I suspect higher rates will slow the market down, increase the ability to find motivated sellers, and ultimately allow non-QM to dominate the market, because I think the delta between conventional and non-QM will be small again.
Oh yeah.
And then it's just speed and all of that. So what do you see going on in the market, assuming conventionals go up from here?
100%. I mean, I just actually came back from a mortgage conference in Dallas last night or yesterday, and the resounding theme is non-QM. I mean, you have traditional conventional lenders now, you know, introducing their new products or something that yeah. So it's like, that's kind of weird. That's
Yeah.
that's interesting. So yeah, it's definitely going to be more relevant and impactful because again, with tighter windows or tighter guideline restrictions on the conventional side, and especially with rates jumping up so high, you're less likely to be able to qualify for those anyway. So that's where
Yeah.
we could step in, utilizing other alternative forms of documentation, whether it be bank statement programs, asset depletion, and in our case, stated income. So just depends on your situation and what doesn't work for you is then ultimately what your next choice would be. But yeah, non-QM is definitely at the forefront on I'm thinking almost every lender that I walk by, and there was some new ones coming up, popping
Yeah.
up out of the woodworks with their, kind of like interesting spin on it. But non-QM is going to be very, very strong in the next few years for sure.
Yeah, and when I look at what's going on the last 2 years, there were a lot of companies that kind of built their business feeding the government business, right? The box to feed Fannie or Freddie as the kind of endless appetite of buyers. And that's over. I actually think the box for approvals gets tighter from here. Not only do we have higher rates, but I think qualifications go up. I remember the last time we had a recession.
Right.
Banks get nervous. Banks
Oh
whack
yeah.
equity lines.
Oh yeah. They'll get
They
tight.
lower, yeah, they lower LTVs.
Mm.
They never really want to say no, but they say no with conditions. Like, nope, not today. Sorry, you don't qualify. You're not a millionaire. You don't make, $17 million a year. We can't lend to you, but let us know when you get there, right?
Right, right. But yesterday you qualified, just not today.
Yeah, today. Yeah, we changed our minds. We're nervous. So
Literally.
you know, it's, I don't have a great feeling about the end of the year. I think 2023 could go down as one of the hardest years economically of my adult life, which, you and I are both 50 now. That's saying we've seen a lot in the last 30 years of our adult lives. And
Agreed.
I think 2022 is going to be rough. But again, as you should know, I say this out one side of my mouth. The other side of my mouth is the opportunities that are coming. If you're
Right.
doing the work, you have the relationships.
Right.
There are going to be some tremendous deals done. And I think non-QM is going to be the answer, just because you're more flexible. You really are that makes sense lender. Talk about why that makes sense lender is the right idea.
Well, again, not every borrower fits into a box. Not every deal is cookie cutter. So there's going to be some difference, varying differences in FICO score, property type, down payment, experience, all those little things to where in the normal sense of conventional financing, it's a very, rigid, guideline. Like you either fit the box or you don't, because it's a computer
Yeah,
basically
you had
analyze your
to
loan.
push a button, right? And then magic happened and it spit out a yes or a no.
Yes,
Wow.
basically. So, in our case, it's a live person, kind of looks at all the, factors in the deal, and then can come up with, something that makes sense. Where, okay, you might be lacking in this area, but you know what? You really got a strong, asset base as far as after down payment, you've got, tons of reserves. So, plus the fact that your experience and anything like that. So even if your FICO score is a little bit lower or something to that effect, we'll still work with you just because your track record proves it. We don't have to look at anything else other than that. So that's definitely going to be helpful because with the increase in rates and the tighter qualifications, it's just not going to be likely that they're going to be able to get conventional financing as often moving forward, unless you're, like you said, millionaires or
Yeah.
whatnot. So
The other thing I wanted to ask you about, and again, I don't know that Velocity plays here, and if they don't, totally fine. But I think you and I have talked about, given there's so many people locked in with low first mortgages, and I think it only gets worse, right? If you're locked in at 3 and suddenly the first is at 7, you're even less likely to move, right? But you're
well,
sitting on a
nah,
bunch of equity.
right.
Do you think seconds become a thing in the non-QM space or no?
No, it already has been.
Oh, okay.
Again, at the mortgage conference, I met several lenders trying to get more details because they just got back,
Sure.
late last night. Unfortunately, massive delays at the airport because of the rains out here in Texas. But yeah, I'm trying to get all the real players
Mm,
to the one rental at a time channel and in family because
okay.
there's a lot of like pretenders out there, a lot of
Yeah.
fly by night just popped up with great ideas, but when you
Yeah.
submit the
Nothing
file, it
delivered.
goes
Yeah.
nowhere. Right,
Yeah.
right, right. So I just want to be able to make sure that before I introduce them to the one rental at a time family, that I've
Mm,
kind of vetted them to some extent, not just,
good.
hey guys,
Thank
look what
you.
I found, and it's like,
Yeah.
oh yeah. So
Yeah. That
just trying to
didn't
do
work.
yeah. So just trying to do my homework,
Okay. Thank you.
and make sure that they're a solid company before I say anything because there's a lot of
Yeah.
pretenders out there, and I don't want to. I
Yeah.
definitely don't want to bring that to the channel.
Yeah.
So
No,
other than that,
don't ruin your reputation. It's not worth it.
not at this point, not at this point. But long story short, definitely seconds are because again, like you said, who wants to touch their first?
No.
It's just not a thing. So yeah, it was really interesting to see how many of the what I'd seen in the past traditionally, conventional lenders switch over to, non-QM and no DSCR or excuse me, DSCR programs, bank statements, asset depletion, all these different things, which was really, really
Well,
interesting. So
it's funny. Starving is the mother of invention. They're they're like, oh, we better do something, or we're not going to be in business much longer. Yeah.
well, yeah, and unfortunately, some other people didn't make the moves, quick enough or
Yeah.
could pivot, and yeah, they're gone. So,
Yeah. There you go.
and that was the other thing too. I didn't want to bring this up, and it's not like the sky's falling, but several booths were empty,
Yeah.
and
I would
the,
imagine.
the well, there were several lenders or other vendors that were supposed to show up didn't come.
Yeah. They paid for
So
the booth 3 months ago, but then they're out of business. So that's like, whoop, that's some open
or
space.
something's tight, marketing, tight or whatever the case is. But yeah, that I found that very interesting as well. So
Mhm.
I think in the near future there's going to be, like you said, some pain. So there's going to be some players falling off on the sides, and
Yeah.
there's going to be the really strong that are going to survive. So no,
Yeah.
yeah, well,
At the end of the day,
I'm
folks,
excited.
if you're on one rental at a time, you are hopefully doing the work. One of the things you should be doing is growing your network. Do yourself a
Yes.
favor, reach out to Stephen Dow, Velocity Mortgage. I've used them to refi apartments and office buildings, so I know it works. Yeah. How do you want them to do that?
Just email me, please, sdao@velocitymortgage.com. In the subject line, just put the acronym ORAAT, which stands for one rental at a time. Body of the email, simple description, what you're looking for, maybe. Property address would be great. City and state, at least, where you're looking to finance or get financing for to make sure I lend there. Mid FICO score would be great. And then the best phone number to reach you. And I'll typically be in touch within 24, 48 hours. Normally, it's just that I just got back from
Yeah.
vacation, and then basically a day and a half later, I have to go to a mortgage conference. So apologies for any slight delayed responses, but I'm going to be caught up this week or this weekend because it's a nice 3-day weekend. Not for me though. I'm going to be working all weekend. So yeah, what are we
There you
going to
go.
do? In any
There you
case,
go.
I appreciate it, guys.
All right. Thanks, buddy. I appreciate you. Bye.
Thank you.